as we release our financial results for the year ended 31st March 2025. So this year, we didn't just grow, we accelerated with double-digit growth in both revenue and net income. Safaricom Kenya, if you have your calculator, start to divide by 129, which was the exchange rate. Safaricom Kenya achieved 381 billion Kenya shillings in total revenue, which is up 11.4%, with earnings before interest and taxes, which we call EBIT, growing by 13% to 158 billion, and net income growing at 12.7% to 95.5 billion, almost 100 billion Kenya shillings at a bottom line level. You should clap. I'm sure the people online are clapping. So the middle bit is quite important. Excluding the impact of currency reforms, which you have seen affecting Ethiopia, and what we call hyperinflationary accounting, which is reflected in our group results. Group revenue went up to by 12.9%, with EBIT growing by 16.2%, and net income climbing by 14.2%. So double-digit growth across the board. No, I should have said the middle bit excludes the impact of currency reforms and hyperinflationary accounting. And the bottom bit is now the reported earnings. Including the impact, which is the bottom row, including the impact of currency reforms in Ethiopia and hyperinflationary accounting, group revenue, this is the big number, hit 388.7 billion Kenya shillings, up 11.2%, while EBIT grew by an impressive 29.5% to 104.1 billion Kenya shillings. With net income still in growth despite all the factors, including FX and hyperinflationary accounting. Net income growing 10.8% to close at 69.8. This is excluding minority interest. So, ladies and gentlemen, we are encouraged to note that Ethiopia will be accretive. This was the year where we had the highest amount of losses in that business. So it will be accretive to the business going forward, and you'll see it reflected in our financial year 2026 guidance.
The fiscal year under review has been extremely eventful as we marked major growth milestone as a company. These milestones are the foundation for the solid performance that we're discussing this morning. As usual, just to note that the detailed financial results will be available in our websites right after this session. Now, I will talk about a little bit more details of financial performance, the health of the business beyond what you have seen the numbers. The customer base grew significantly across all segments of our business. The overall 30-day active customers grew by 7.1% to 37.1 million, the highest year-over-year growth in 4 years. At this rate, we will not finish the presentation because there is a lot coming. 1 month active MPESA customers grew incrementally by 3.4 million in 1 year, a double-digit growth of 10.5%. This was also the highest year-over-year growth that we have seen in last 4 years. Connectivity customers also grew by 7.1%, also the highest in last 4 years. And the last segment, which is the fixed data, grew double digit, actually grew by 20.5%, and we have sustained a double-digit growth in fixed data every year since 2019. Now, moving into revenue, I'll start with service revenue. This slide is quite familiar to you. To start with, double-digit growth, and this is on the back of a double-digit growth seen in prior year, and it's the first time we have recorded consecutive double-digit year-over-year growth in service revenue since 2018. Customer growth that I just spoke about drove 5% of the revenue growth, the service revenue growth, and with ARPU contributing 4.8% of the growth, which basically signifies that our health of the growth is quite good, driven by both customers as well as by ARPU. And the slide on the right side, which gives the evolution of the contribution of the various business, you can see that the contribution is changing more towards MPESA. MPESA now contributes 44.2% of the revenue. But you experience growth across all segments of revenue. Fixed revenue grew by 12.9%. Connectivity revenue registered a high single-digit growth of 6.5%. And of course, MPESA grew by 15.2%, contributing 61% of the incremental revenue growth for the business.
So we had great performance in both operating companies in Kenya and Ethiopia, while within their guidance that we gave to investors. And consequently, the group performance was well within the guidance, again, that we provided to investors last year. And I'll be coming now to the 2026 guidance. We had a strong and healthy business and have recorded growth across all key metrics. We have exhibited strong customer engagement and innovative spirit, reflecting on our Safaricom spirit. Ethiopia has performed greatly, continuing to drive commercial momentum and contributing close to 10% of our group revenue, and now starting to become very accretive. And this is despite significant foreign exchange reforms. We have successfully transitioned to our next strategic cycle and charted. We have successfully transitioned to our next strategy cycle and charted our next strategic framework. This framework will enable us to achieve our vision of being Africa's leading purpose-led technology company by 2030. And finally, Safaricom PLC has achieved significant milestone, and you'll be hearing a lot more from the chairman if you calculated the numbers at a top-line level in dollar terms. So we'll be announcing a big number there in dollar terms as we get close to being a technology company on a total revenue basis. In terms of 2026, just in highlights, which is this year now, we will accelerate scalable technology solutions as we defend and grow our core business. We will achieve this by delivering safe and secure, and I repeat that, safe and secure, digital-first customer experiences, and most importantly, enhance our brand while living the Safaricom spirit. To succeed, we'll enforce discipline in our execution, optimize our costs, nurture and maintain a positive regulatory environment, and consistently engage our customers and commit to a zero-harm safety culture.
Let me now start by commending Peter, Dilip, and the entire Safaricom team for diligently executing the strategy as approved by the board that has enabled these great numbers. I'm hoping that you listen very carefully to what Peter and Dilip had to say, but I'm going to say it slowly, very slowly. Service revenue of nearly $3 billion USD and total revenue already exceeding $3 billion USD. Take a note, the currency is not shilling, it's USD. Well done, team. Congratulations to all Safaricom staff, both in Kenya and Ethiopia. Well done. Your hard work and dedication have enabled these results. This year marked the end of our 2025 vision cycle, which was to transform the organization from a telecommunications company into a strong technology company. On behalf of the board, I'm happy to report that we are satisfied with management's execution of the strategy thus far, and I'll tell you a little bit about our achievements on Vision 2025. As you've heard from Peter and Dilip, we successfully achieved the vision that we set out to. Allow me to unpack some of these achievements. Since launching our 2025 vision in the financial year 2021, we have attained remarkable group revenue growth by 47.8% or 8.1% on a compounded annual growth rate basis, from 251 billion shillings in 2020 to 371 billion shillings in the financial year 2025. That shows you how strong the company is and how quickly it bounced back from the effects of COVID. Other companies are still struggling. Isn't it a superb achievement? We have invested heavily during this period with an average group capex of 73 billion shillings yearly. Investing in network infrastructure has enabled us to increase capacity and improve customer experience. During this period, we supported Kenya as the tech partner of choice in delivering major public sector programs in social protection, health, agriculture, financial inclusion, amongst others. Our entry into Ethiopia 3 years ago is bearing fruits with a sustained commercial momentum and network growth covering approximately 50% of the country's population. Most importantly, during this period, as you have heard from Peter, we invested close to 20 billion shillings and touched over 13 million people with programs and initiatives across education, health, economic, and environment. Very impactful, right? We have also remained a leading corporate citizen, contributing over 678 billion shillings in taxes and annual license fees during the 5 years period under review. Not many can even be claimed to be close to these numbers. Ladies and gentlemen, this period was not without its challenges. The board acknowledges the various efforts by management in navigating the tough macroeconomic and regulatory hurdles both in Kenya and Ethiopia. Specific to the period under review, the board noted, amongst others, the reputational brand erosion, competition threats from traditional and emerging players, and the increased regulatory scrutiny in both markets. The board is happy with the countermeasures employed by management. Well done.